Hello, my name is Eddie Tofpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Chicago wheat. The rise of the market back in late April up through all the moving averages, as well as up through some considerable congestion between September to November last year, and again in mid-January to mid-February this year. This was the final creation of the early February to late April reverse head and shoulders bottom that gave us the move higher in the first place. If you wanted to pick a date, then the 23rd of April with a clear close over the dark blue neckline, currently at 575, that was the day. By the way, please remember that dark blue neckline as it will feature again in more recent action. Okay, so the market peaked at the January 2022 low at 739 in late May, turning lower and creating a small descending triangle on the way down. The primary target at 613 and the secondary target at 597 for this pattern were both easily achieved. And prices did not really stop until once again reaching the dark blue neckline, the one previously mentioned. This is what I said 5 weeks ago on this matter as prices were driven lower to the dark blue neckline, and I quote, "This is what we are testing right now. Should this give way, then the next support is the December 2020 low at 566. And I suspect that we may see a slowing down towards there as the congestion throughout mid-February to late April starts kicking in under 588. Goes all the way down to at least 545. So watch out for potentially some slowing from then onwards. This would also tie in with the idea of us looking at that small descending triangle as a possible halfway hesitation on the way down." End of quote. So we saw the slowing down. But what's next? Well, the small descending triangle was in effect a bearish halfway hesitation, but since then the congestion from mid-February to late April has slowed the market's decline. Not stopped it, I hasten to add, just slowed it. We have formed a small bear channel since late June, highlighted in bright red on my daily chart, and that's currently 472 to 577. Now I believe that one should not look at this bear channel in isolation. Instead, look at it as part of the V-top, because a derivation of the V-top is a V-top with a handle or extension. I think that is what late June to date action might be. So what can we tell from such a pattern? Well, usually such patterns are small, much like the size of the earlier small descending triangle, and they're usually pennants or bear flags. Not so in this case, but it does not take away that much from the case for such a larger pattern. Thus I would look for the bear channel trend lines to show the immediate support and resistance. However, the pressure in such a pattern will be for lower prices. And I can see immediately that below we have the September 2020 low at 540. And more importantly, the 38.2% absolute Fibonacci line at 521. Now personally, I would not even start I would even start considering the 2016 today uptrend, currently at 479, and even the 2005 today uptrend, currently at 450. But these are not targets, just thoughts for another day. Chicago corn. An extension to the lower trend line, currently at 466, of the July 2023 to January 2024 descending triangle, as well as the long moving average, currently at 457, capped the market throughout May, leading to a small double top pattern. Prices headed lower, reaching both the primary and secondary targets for this double top, and moving lower below all the moving averages in mid-June, accelerating the fall once past the hurdle of the November 2020 high of 439. Now prices finally halted between the November 2020 low at 403 and the October 2020 low at 387, creating a teeny triple bottom and recovering all the way up to the highs this week of the 50% absolute Fibonacci line at 425. In the process of pulling back up, the market made a small July-based ascending wedge pattern, currently 414 to 426. Today, well, we have penetrated the lower trend line and likely closed below it as well. It's too early to say if this is a true break lower. It might just be Friday long liquidation ahead of the weekend, but in case it is, and today is the day, then potentials below are for a primary move down to the 415 zone and a secondary harder to reach move down in the 390 zone. Now these are not target levels, not yet at least, as it's too early, but watch carefully this coming week should the market try lower or try to reacquire the ascending wedge pattern. One final point, and that's to consider in the longer term, and only if the market really starts moving lower, consider whether this action through July is a bearish halfway hesitation or not. July last year today, whether it is or not, but only if it starts really moving lower. Kansas City wheat. Okay, so late last year we saw the development of a descending triangle from late November 2023 to mid-February 2024, highlighted in purple on my daily chart. 15 weeks ago we had an attempted breakout below, but prices hesitated, then continued to hesitate, such that what I initially thought might be a triple or a quad bottom eventually became a quintuple bottom and also a rectangle pattern based on the 551 to 590 area. Now please remember this area, 551 to 590, as it will become relevant again in more recent action. On the 22nd of April, yes, I can narrow it down to a single day. On the 22nd of April, we saw the first significant breakout of this rectangle pattern on the upside, piercing, and then the next day closing over the mauve highlighted medium moving average, currently at 618, which had run in parallel and just above the purple highlighted upper trend line of the descending triangle. The rise finished at the end of June with a V-top at the combination of the June 2014 high and the 2022 low at 748, turning lower throughout June such that by the end of the month prices were back down below the mauve medium moving average and down this time at the purple highlighted extension to the lower trend line. This time actually of the original descending triangle, along with the important July 2021 low at 578 and the March 2021 low at 559. Since then, prices have moved sideways with decreasing highs and a new dark blue highlighted downtrend, currently at 593, has developed. This pattern construction is not a duplicate of what we have seen elsewhere, in Chicago for example, but it is a familiar one. You see the V-top has a handle or an extension built from late June to date. As I said in Chicago wheat, I believe that one should not look at this handle or extension in isolation, even though it has elements of a possible descending triangle about it. Instead, look at it as part of the V-top, because a derivation of the V-top is a V-top with a handle or extension. And I think this is what late June today's actions might be. So what can we tell from such a pattern? Well, usually such patterns are small and are usually pennants or bear flags, but not so in this case. It does not take away that much from the case for such a larger pattern. Thus we'll look for the dark blue downtrend and either the March 2021 low or the March this year low at 551 to show the immediate support and resistance. However, pressure in any such pattern would be for lower prices, and I can see immediately that below we have the important 38.2% Fibonacci, absolute Fibonacci line of 533. However, personally, I would not even start considering the unreconstructed December 1990 to date uptrend, and even perhaps the twin dangers of the 2003 to date uptrend, currently at 446, and the 2002 uptrend at 438. I would not consider anything until then. I should stress, these are not targets, just thoughts for another day. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Topic and ADM Investor Service International Limited. And here comes the final important bit.